Hey everybody, Chris here. So there was a big dump in the crypto markets on Friday. We're going to be exploring why that was and what you can do about it in this video. Please be sure to subscribe to my channel. Hit that little notification bell. You can be notified when my new videos come out, as well as when I do live streams. And we were live during the dump on Friday. Had an epic long live stream where we were covering live as it was happening, what was going on with the trading, where the possibilities were, where the trading could go, and also talking about what you can do about it. A lot of people were worried. A lot of people were like, oh, is this going to keep crashing? A lot of people setting really low limit orders that probably won't be hit. We're going to cover all of that in this video. So let's take a closer look. I'll show you what I'm looking at. So we'll start here by looking at the Dogecoin chart, using Dogecoin as a guide as to what the market sentiment is. This was the dump that we had on Friday. Yeah, Doge was up around 20 cents and then looked like right when it came down to 19 cents, it might have settled there, but we had two big dumps that happened on Friday. Doge came all the way down, just about touched 16 cents. And I know there were some of you who said during the live stream you picked up some Doge at 16.3, 16.4. Some even caught it here on a little bit later dump in the evening, probably, as Doge retested about 16.4 right there. But I said near the end of the live stream, because everyone was wondering what's Doge going to do from here, and I was like, I think the volume is going to settle down. And we're probably going to go sideways for a while between 17 cents and 17.5. Because I didn't see a big recovery happening right away. And that's kind of how it played out overnight. And here we are at like 17.25. We're right in the middle there. So that's playing out just as I thought. Bitcoin hanging out around 67.6 now. I was thinking 67.5, right between like 67 and 68 would be how Bitcoin would trade. And that's right where it is now. We are starting to see a little bit of a tick up happening right now in the trading, but I think it's still going to be sideways. I mean, look at the volume. The volume is like practically nothing now, as everything on Saturday is just kind of smoothing out. So why did crypto crash? And what can you do about it? Well, JP Morgan Chase CEO warns inflation, terrible wars, violence, significant uncertain forces in new outlook. So this is what happened on Friday when Jamie Dimon said this. And things like that, especially with someone in the banking industry with his influence, spooks the market. And then not only did we have equities go down, the stocks were down for the most part. Apple seemed to be one in the green, but most others were in the red, but not at the level that crypto was. So overall, stocks were 1 to 2% down, about 1.5. And for the most part, cryptos were down like 10% or more. But that's kind of the basic. And we have Nick on Coin Bureau. And Nick, why is crypto crashing? Will it continue next week? Number of factors at play that are driving the markets. Also, it's pretty clear that the crash on Friday was driven by macro factors. Main concern right now, higher than expected inflation, geopolitical tension, disappointing earnings guidance from JP Morgan seems to have taken the lead in sending U.S. markets lower. It doesn't look like the macro environment will be improving anytime soon. Interest rate expectations show no pivot till maybe September. Geopolitical threat seems to be heating up. In fact, some would think the markets are significantly underpricing these risks. The war in Gaza, Iran, Israel, will U.S. get drawn in? That's a risk. While Bitcoin's correlation to stocks had trended lower for most of 2023, it appears to be ticking up again. General risk-off sentiment drove all markets lower, including Bitcoin. So crypto is risk-on, riskier investments for many people than equities. And you saw some of that selling. Some of it was fear selling, maybe a lot from inexperienced traders, because you see red in the market and you panic and you sell. There was some during the live stream that said that they did just that as well. Of course, the intense leverage that was built up in the system led to large cascading liquidations. We'll take a look at that in more detail in a minute. There was almost $1 billion in total crypto market liquidations, which was the largest washout in a month. And during the live stream, we were looking at that as it was happening because we could see the liquidation after liquidation. And not only for the longs, but the shorts were getting squeezed during those quick recovery periods because there were many traders that were entering new short positions, particularly when there were these big red candles down, betting on the price to even go lower. So then when the price came back up, it was squeezing those shorts out. So we had both longs and shorts getting wrecked during the dump. While reduction in pressure in the futures market could reduce volatility this week, the broader macro environment is still risk off. We have the spot Bitcoin ETFs, the flows. On Friday, it was still more grayscale selling than we had for the inflows for Fidelity and the BlackRock and others. So, however, the silver linings. Grayscale outflows can only go for so long. Potential spot ETF launches in Hong Kong could buoy the market. And as we saw yesterday, that's not only Bitcoin, but it's also an Ether spot ETF as well, starting in Hong Kong next week. And we are only 6 days away from the halving, which could drive a retail investing narrative. So whether this could be enough to counteract the macro remains to be seen. Going to be an interesting week. And that's what I think we are going to have some volatility next week, but just not this weekend. Everything is settling this weekend. So Fed rate cut expectations have changed. I was thinking June, all the way from back in January, I was saying, but we're not going to see any rate cuts till June. March FOMC, no rate cut. Markets responded negative. People were upset. I was just like, it's too soon for that. We have had CPI, the inflation reports inflation has been higher than expected for January, February, and March now. So 3 months in a row is like, people were too many expectations that inflation was being tampered when in fact it is going up a little more than expected. So expect the U.S. Fed to continue to pause on that. So that doesn't help. Again, what do these things do? It just means the crypto market is red. This is, as I'm recording this, these are the 24-hour returns and everything is in the red. We do have the memes. The top meme coins seem to have been hit worse than other cryptos, but for the most part, everything in the red. Here's Bonk at 14% down. Doge now 10%. It had a little bit of recovery. Floki down 13%. So we're seeing all of these still double-digit down because we haven't had a big, nice recovery yet. Jasmine has come back a little bit. That's now in the green. It's one of the few. But overall, it's like, take Edward Snowden for what he is, but he's mocking crypto people, freaking out because, he looks at X and sees people posting on X. There was a lot of fear in the market during the dump. But he says, look, the price is the same as it was 7 days ago. And that's what I said during the live stream. It was just like, just a week ago, we were praising 17-cent Dogecoin. We thought it was awesome. And now we have 17-cent Dogecoin, and we're just like, ugh. Because we were just experiencing 20-cent Dogecoin. So, it's just like, settle down, guys. Let's zoom out, right? When in doubt, zoom out. Look at the bigger picture. Cryptocurrency traders lost nearly $1 billion in 24 hours amid market crash. How do you lose, right? How do you lose $1 billion? Well, you don't lose by selling, right? So it's an unrealized loss, right? If you're still holding onto your crypto, but you probably have held much longer and you're still overall in the green. So this is just a pullback. and pullbacks do happen in the markets. We've talked about that. We have seen Bitcoin during bull markets in previous cycles have 20, 30% pullbacks. And this was only like a 10% pullback. So this is nothing compared to the volatility that we've seen in the past. But what is this? But what's happening here? These are derivatives, trading positions. People doing leveraged trading, taking long positions, 3x, 5x, 10x, even 20x. And what happens when you see these big pullbacks is you get stop losses, you get liquidations, those betting long get wiped out. The exchanges know what your bids are. When you place a leveraged trade, they see what your trade is, they see what your liquidation is, and I think the second dump that we had there were the market makers taking out those liquidations. That's what we see happening. We looked at CoinGlass, we looked at the liquidation heat map, and there are still liquidations going on now. People are trying to recover, the traders are trying to recover by doing new leveraged trading, and they're continuing to get burned. They're continuing to get burned. So this could be more on the shorts right now, people who are shorting the market. And I mean, look at the Jasmy ones. Jasmy's going up. People are shorting Jasmy thinking it's going to go back down, and instead they're getting squeezed out. This was the big dump that we had on Friday. In 1 hour, $200 million. And then the next hour, over $400 million wiped out on the long, but we also had 50 million on the short. Again, that was when Bitcoin actually then turned around and traded up right here, because there were new short positions that were open while the red candle was going down, and then they got squeezed out. They got squeezed out. So what does that tell you? It tells you what I've been saying all along, is don't F it up, right? DCA, buy and hold. And then we have this story. One crypto trader lost $1 million overnight. $1 million. What were they doing? What were they doing? This is Crypto Nerd, actually reported it on X. He opened a 3x leverage long position on Pepe. He used $1 million worth of Tether to open this position. Guess what happened? He got wrecked. And his position went to zero. 100% loss, over $1.1 million gone, wiped out. The exchanges don't want you to win. They lose money when you are successful on a leverage trade. What are you doing? What are you doing? 3x leverage on Pepe. Well, look. On Friday afternoon, it wasn't just Bitcoin, though. In the end, it was also gold. Gold price dropped 4% in hours after the Fed's latest rate cut comments. So volatility was across all markets and even hit gold in the afternoon, which was interesting because gold is usually more of a safe asset, but gold went down as well. So what do you do about it now, right? Where are we? What is the position we're in? What can you do about it now? Well, look, although comments should indeed lead to volatility in riskier markets like crypto or even Wall Street, gold should be spared. Given its status as a safe haven, its price against the dollar might increase. The greenback, that's the US dollar, actually rose against other currencies. The crypto market, still in deep red on the daily scale, but has recovered some ground since the lows seen last night. After all, more than $250 billion left the market within hours at one point, which we just saw those leveraged positions getting wiped out. There are some promising signals for the next few weeks. Most importantly, the Bitcoin halving is scheduled to take place in just days, an event highly regarded as a catalyst for a new bull run. At least historically, that's what we've seen. And with Dogecoin, we have Doge Day as well. And it looks like those two dates are going to coincide Bitcoin halving and Doge Day together. That's going to be exciting. So, Crypto Trader says he is super bullish on one top 10 altcoin. One top 10 altcoin. What is that? Well, this is Sherpa. He tells his followers on X that he intends to accumulate Dogecoin. That's right, he is accumulating Dogecoin. The play, in my opinion, is just to buy down to 15 cents. Just let this sit for the cycle. Super bullish on Doge, doing something silly later this year. He also thinks Bitcoin is likely to range trade between 73K and more of the same, just the chop before we break all-time highs. Altcoins still look a little bad, but in the fall, we are expecting big gains in the market as we'll be going into the second bull run cycle, in this overall cycle, as we've talked about before. So that's the status of the market right now. Let me know in the comments below, were you able to hold? Did you get flushed out on your trades? Did you panic sell? Or are you just accumulating and waiting for the big bull run to happen? Give the video a like. If you haven't already, please subscribe to my channel. I appreciate the support. We'll see you next time.